Welcome to the May Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, the market seemed to pull back a bit in April after having seen some gains in the first quarter. What happened?
Well, I think there are a couple of things going on, Maria. The first part of it is this is a perfectly normal event. After a period of strong gains and strong performance, there's inevitably kind of a settling period where people take a look at their portfolios, maybe take some money off of the table. Again, nothing to be concerned about. The other component, and I think the thing that we are keeping an eye on, is there's an assumption that whereas maybe last quarter people thought the problems were out of the way, U.S. growth had resumed, and the European situation was on its way to being settled, now people no longer necessarily feel that way. So there's a renewed caution in allocating capital in the markets, and I think that's another driver of what it is we're seeing here.
You mentioned the European Union, and you have been cautioning us not to be lulled into thinking that it was solved. So tell me what has developed over there.
Well, the European situation has all of a sudden revealed itself not to be solved at all. You're seeing Spanish yields and to some extent Italian yields start to creep up again. You're seeing political uncertainty. In fact, you just saw the Dutch government collapse. A lot of what had made the problem seem to go away was due to what the European Union calls the long-term refinancing option, which involved basically recapitalizing the banking system, giving them a lot of cash in exchange for whatever collateral they had. And what it turns out the banks did with that money was then go and buy government bonds from their domestic governments. So consequently, there was an enormous amount of demand for those bonds, which hadn't been there before, and yields went down and the problem seemed to go away. Now, however, the money is starting to run out, so you're starting to see yields crank back up again, and that is where we're starting to see the problem is not in fact solved at all.
What impact do you think this will have on the domestic economy?
Well, there are really two avenues of transmission from Europe to the U.S. Certainly, it will have an impact. The transmission mechanism through the financial system has largely, and I don't want to say completely, but has largely been dealt with. In other words, the financial system is aware of what's going on. They've built in some circuit breakers. They've taken measures to de-risk, to de-expose themselves. The U.S. financial system is not completely isolated, but we're better than we were. The other transmission mechanism is confidence. And if you have a situation where Europe again starts to have problems, that absolutely affects both business and consumer confidence in the U.S. I think you're starting to see that to some extent. That's going to affect business investment. It could affect consumer spending. It could have a tremendous knock-on effect across the board. So it will have an effect. That effect will most probably not be positive. At this point, I expect the effect to be limited.
You and your team seem to have a lot to keep your eyes on over the coming months. Is there anything in particular that you're going to stay focused on?
We're going to be keeping an eye on employment and consumer spending. What we're seeing in the domestic economy is we are seeing business spending, business investments start to pull back a little bit. We've seen manufacturing output start to level off. Again, not go down, but level off. But interestingly, the consumer has started to pick up the baton. So going forward, we expect to see, moderate slow growth, which is what we've been seeing because of that handoff. Now, the uncertainty in that case is we have a situation where real wages are not necessarily increasing because employment has stopped increasing as much as it was. Still going up, but not as much as it was. And that's something we're going to be watching closely.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.